China's debt now exceeds $13 trillion in household loans alone, a figure larger than the entire economy of Japan. Let that sink in. An economic miracle that once dazzled the world is now carrying a weight so massive it threatens to crack the very ground it stands on. Look closer, and you'll see the haunting symbols of this imbalance. Endless rows of unfinished apartments, entire ghost cities rising like monuments to excess, their windows dark, their streets silent. Families bought into a dream, but what they got instead was a burden that grows heavier with every passing day. It's not just a national problem, it's a global time bomb. But what's hidden beneath the surface could shake the world like never before. To understand China's looming crisis, we have to rewind to the very strategy that built its miracle. For decades, Beijing fueled growth with cheap credit and endless construction. Local governments sold land to developers, banks pumped out loans, and entire skylines erupted almost overnight. Apartments weren't just homes. They became the ultimate store of wealth, a cultural symbol that owning property meant stability, status, and success. When the world locked down during COVID, the cycle only intensified. Interest rates fell, borrowing soared, and speculation became a national pastime. Families mortgaged their futures to buy second and third homes, convinced prices could only rise. Developers promised dream apartments, often selling units before a single brick was laid. But there's a limit to every frenzy. When everyone owns two homes, who's left to buy the third? Millions now sit on unfinished properties they may never move into. Young graduates, once told property ownership was the only path forward, now face unemployment and debt instead. China's miracle wasn't just built on steel and concrete. It was built on credit stacked higher than its skyscrapers. And beneath that glittering skyline lies a debt story no one dares to confront. Every bubble has its winners. And in China's case, the architects of its looming collapse aren't the millions of families struggling under debt. The true beneficiaries are the developers, banks, and power brokers who built an empire on speculation. Take the property giants like Evergrande. They sold apartments before they were even constructed, raking in deposits by promising a glittering lifestyle that, in many cases, never materialized. These corporations ballooned into giants, feeding off endless demand while cutting corners, borrowing recklessly, and hiding risk deep within their books. Behind them stood the shadow banking system, off-the-books lenders offering high-interest loans when official banks hesitated. Local governments, desperate for revenue, fueled the frenzy by selling land at inflated prices, tying their financial health to perpetual construction. The more people bought, the richer officials and developers became. And yet, the very politicians who championed stability encouraged this addiction. They told citizens property was the safest investment. Even as cracks began to show, families were urged to buy into a dream, while the elite quietly cashed out. The hypocrisy is staggering. Those at the top profited from the illusion, while ordinary families were left holding half-built apartments and crushing loans. And while the powerful celebrated, whispers of warning began to spread, voices struggling to be heard above the roar of unchecked greed. Amid the glittering towers and government headlines promising endless growth, a quieter hero has been emerging. The truth itself, written in data that cannot be silenced. The numbers are staggering. China's total debt-to-GDP ratio has climbed to historic highs, surpassing even the levels seen in America before the 2008 crash. Millions of apartments lie unsold or unfinished, while birth rates plummet, meaning fewer young buyers will ever enter the market. Entire ghost cities sprawl across the nation. Concrete jungles without residents, monuments to a bubble no one dares to admit exists. For years, independent economists tried to sound the alarm. They warned that debt-fueled growth cannot last forever, that property prices rising 10 times faster than wages was unsustainable. But those voices were often censored, drowned out by state propaganda, insisting the Chinese miracle was indestructible. The human toll tells the story better than any chart. Families have poured their life savings into apartments that may never be completed. Young graduates, already burdened with student debt and a job market offering few opportunities, now face the reality that owning a home, the ultimate badge of adulthood in China, may be forever out of reach. Elderly parents, who once invested in property as a retirement plan, now watch their supposed nest eggs lose value. The pain is real, the warnings ignored, and the storm clouds growing darker. And then, the collapse of Evergrande pulled back the curtain, turning whispers of instability into screams of crisis. The cracks that once seemed invisible are now impossible to ignore. Across China, angry homeowners have begun to boycott mortgage payments on apartments that were never finished. Construction sites sit abandoned, skeletal frames of buildings looming as symbols of broken promises. Youth unemployment has surged past 20%, leaving millions of graduates with degrees but no jobs, and with little hope of ever affording the homes their parents urged them to buy. The generational contract, that each generation would be wealthier than the last, suddenly feels shattered. On social media, the tension boils over. Weibo fills with frustration, videos of half-built complexes go viral, and hashtags about housing protests trend, only to be censored hours later. The government insists the crisis is manageable, but the people living it feel otherwise. International headlines now speculate. Is this China's Lehman Brothers moment? Global investors begin to pull back, spooked by the scale of the problem. The confidence that fueled decades of growth is giving way to something darker: fear. The sense of inevitability grows. This isn't just a slowdown. It feels like the opening tremors of something much larger. But the next shockwave didn't just shake China, it rattled the entire world. Then came the revelations that confirmed what many feared. The problem was far bigger than anyone had admitted. Reports surfaced showing that local governments were hiding more than $9 trillion in off-the-books debt, funneled through shadowy financing vehicles. Entire provinces were balancing their budgets on loans they could never repay. And the real estate bubble? Even worse. Analysts revealed that China had built enough empty apartments to house the entire population of the United States, twice over. Miles of ghost cities stood as eerie reminders of unchecked growth, each one a monument to speculation. Meanwhile, household debt ballooned to record levels. More than 70% of young Chinese adults now hold long-term debt, much of it tied to properties that may never deliver returns. As foreclosures tick upward and wages stagnate, the dream of prosperity morphs into a nightmare of endless repayment. The global reaction was immediate. Investors panicked, the yuan weakened, and markets across Asia began to tremble. Hedge funds debated whether to short Chinese assets. International media drew comparisons to 2008, warning that if China's property market collapsed, it wouldn't just be a domestic issue. It could send shockwaves through the global economy. On social media, the fear became palpable. TikTok videos of abandoned housing projects drew millions of views. WeChat conversations buzzed with stories of families unable to access their savings as smaller banks wobbled. The illusion of unstoppable growth was fracturing before the world's eyes. The truth was undeniable. China's miracle had been built not on stability, but on a mountain of debt dressed up as prosperity. And now, that mountain was beginning to crumble. Suddenly, the unthinkable didn't just feel possible, it felt inevitable. And history has proven one thing: when China trembles, the world doesn't watch, it shakes too. When China stumbles, the tremors are felt far beyond its borders. As debt defaults pile up, commodity markets swing violently. Iron ore, steel, and copper prices dive as construction slows. Asian stock markets wobble, and Wall Street analysts issue late-night reports warning of contagion risk. But in every collapse, there are winners. Global hedge funds move quickly, shorting Chinese developers and betting against the yuan. Foreign investors with cash on hand circle distressed assets, waiting for fire sale opportunities. For them, China's pain becomes profit. For ordinary people, however, there is no silver lining. Middle-class families watch their life savings evaporate as unfinished apartments lose value. Pensioners who invested in real estate for retirement see their future security crumble. Small businesses, once buoyed by construction booms, close their doors as demand dries up. Inside China, frustration spills into the streets. Protests break out at banks and government offices, though many are swiftly silenced. Online, citizens vent their anger, only to see posts deleted and accounts suspended. The sense of betrayal is sharp. People were told property was the safest bet, yet it became their greatest liability. Globally, the uncertainty rattles policymakers. Could this be the spark for the next worldwide recession? The fear grows that China's debt bomb might detonate far beyond its borders. But buried inside this chaos is a warning, not just for China, but for every nation building prosperity on borrowed time. At its core, China's debt crisis isn't only about numbers. It's about what happens when a nation builds its future on borrowed money and borrowed confidence. For decades, growth was celebrated, but the foundation was fragile. Credit stacked higher and higher, until the weight became unbearable. The lesson is universal. Whether in Beijing, New York, or anywhere else, prosperity built on endless speculation is an illusion. When leaders chase short-term gains, when corporations prioritize profit over people, when ordinary families are pressured into debts they cannot repay, the outcome is always the same. The bubble bursts, but collapse isn't destiny. Panic doesn't solve problems, awareness does. Resilience, transparency, and accountability are stronger than any bailout or propaganda campaign. The truth, no matter how inconvenient, will always outlast the spin. For the people of China, the road ahead will be painful, but it also holds the chance for reform. For the world, it's a warning sign written in bold letters. No economy is too big to fail. And the question the world must now ask is this: will we learn from China's debt bomb, or will we wait until it explodes? China's debt bomb is ticking, and the world is watching. What was once called an economic miracle now looks dangerously close to unraveling. Ghost cities, hidden debt, and broken promises have exposed the fragility beneath the glittering skyline. The fuse is lit. The only question is how long until it blows. Stay informed. Don't look away. Subscribe for more hard-hitting breakdowns. Share this video with someone who still believes this time is different. And tell us in the comments, do you think China's crash could trigger the next global recession? Because when debt meets denial, only one survives.